So I'm here to give you an update on property and business taxes. So just to confirm that a lot of speculation about what would happen to entrepreneurs relief. Well, the good news is that no changes have been made to that, so there's still a 10% rate on lifetime gains of up to £1 million. The Enterprise Management Incentive Share Option Scheme, now that relies upon employees meeting the minimum working time requirement. The government has recognised the impact of coronavirus and people's ability to meet that working time, particularly if they've been furloughed. So the government have made an announcement that actually if you have been furloughed or had your working hours reduced because of coronavirus, then the working time requirements are relaxed, both for people who are going to be granted new options and those who have existing EMI options. You've all heard that the government announced an extension to the stamp duty holiday. So the current £500,000 0% band will now remain in place until the end of June this year. But even after this date, for a 3-month period up to the end of September, then there'll still be a 0% band of up to £250,000 of purchase price. But from the 1st of October, then the thresholds will go back to what they previously were. Now, the non-UK resident Stlt surcharge rate, that's a really interesting change. And basically, it'll add on a 2% surcharge rate in addition to those rates that you saw on the previous slide. And that applies to non-UK residents purchasing residential property in England and Northern Ireland. And it applies to purchases completed on or after the 1st of April this year. You'll see from the text below that the definition of non-UK resident is wider than what you might expect. For example, a UK incorporated company could fall within these non-resident rules if you have a minority shareholder who is non-UK resident and whose relatives might hold the other percentage shares in that company, because any rights of the relatives are attributed to the non-UK resident shareholder. So that's something that many conveyancers will need to watch out for. You'll see that the non-residential rates of stamp duty have remained unchanged. The annual tax on enveloped dwellings, the charge will rise by 0.5% from the 1st of April this year. There's a welcome extension of the business rates relief that applies to retail, hospitality and leisure businesses. And also, there's going to be a freezing of the current VAT registration and deregistration thresholds until the end of March 2024. Now this will mean that many more businesses will start to fall within the VAT threshold and will need to be VAT registered. As Faye mentioned, there is a VAT deferral procedure in place now. So those that deferred the VAT that was due for the period from March to June last year, previously they'd have been required to pay that in full by the 31st of March this year, but it's possible for businesses to put an instalment payment plan in with HMRC, and that needs to be put in place by the end of June this year. The government announced an extension to the reduced rate of VAT that applies to the provision of holiday accommodation, so holiday hotels or holiday cottages, or also sales of food and drink, and admission to attractions such as theatres and shows. Now, that new 5% rate will continue to be in place until the end of September, and then it will increase to a 12.5% rate from the 1st of October this year until 31st of March next year. So that's something that many businesses in that sector will need to watch out for when they're invoicing, when they're getting close to those dates where the rate increases. Okay, it's just a reminder here that the new VAT reverse charge system affecting the construction industry is now in place, and that became effective from the beginning of this month. And it's a very new system and a very important structural effect to the way VAT is collected, because in the context of a subcontractor and contractor relationship, it would now be the VAT registered contractor who pays over the VAT directly to HMRC when they've been invoiced by a subcontractor. It mirrors very closely the construction industry scheme in terms of the type of work that would be covered by this new VAT reverse charge system. There are a number of services that are excluded, such as architects, surveyors and consultants, and also this new system doesn't apply where the recipient of those services isn't themselves making a construction type service. The government pressed ahead with the new postponed VAT accounting system so that instead of businesses paying import VAT on entry of goods into the UK, they were able to pay it through their next VAT return. Now I'll come on to this really interesting new announcement about freeports and towns funds. And I think it's fair to say the East of England did quite well from this announcement. So we turn to freeports first of all. There were 8 freeport sites which were announced, and one of which was the Freeport East bid, which was comprising Harwich and Felixstowe. And also I understand that it also included the Gateway 14 site at Stowmarket as well. And basically what they aim to do is that goods can arrive into the Freeport from overseas, and no tariffs or import taxes will be triggered if they're then re-exported overseas, even if they're manufactured within the customs zone between arrival and export. So manufacturing businesses could import raw materials into the Freeport, manufacture them at one of the customs sites within the Freeport, and then export them back overseas without paying any UK import taxes. The government are also keen to make sure that businesses are incentivised to invest, and so the stamp duty land tax relief has been announced for businesses purchasing land and property within the Freeport area, as long as that land and property is used for a qualifying trading purpose. And there is a clawback mechanism if something happens within 3 years of purchase. Now that relief becomes available from when the tax site is designated as a tax site and the 30th of September 2026. There's also enhanced tax deductions available for businesses maybe constructing buildings within that Freeport area or buying buildings, and they can claim a 10% tax deduction per year, which is much higher than the current, the normal rate of enhanced structures and buildings allowance, which is only 3% for other types of building construction or purchases. There's also enhanced capital allowances available on plant and machinery that is spent within this Freeport tax site. And again, those tax benefits are available until 30 September 2026. And there's a number of other benefits, such as business rate relief and also lower employer national insurance contributions. So it's a really exciting thing for this region, particularly the Harwich and Felixstowe docks. Okay, the last thing I want to talk about is the Towns Fund. The government designated over £1 billion with the aim of providing economic regeneration within towns across the whole of England. Now, the government selected a number of towns in the east of England as recipients of this fund, including Lowestoft, Colchester and Ipswich. And the idea is that that will then be used to look at the high street. If there's vacant space in the high street, how can that be used in an effective way? I know that Colchester Borough Council, they're talking about creating digital skills hubs with that money. So it'd be really interesting to see over the next few years how that money is spent. I'll leave you with a quote by Rishi Sunak yesterday on the more positive measures in the budget and the way he described it, extending the awesome power of opportunity. I'll now pass you over to my colleague Jason Fairs to talk about corporate tax.